Good day, guys. Welcome to Forex Walker. Welcome to episode 55. On this episode, I'll be coming to you guys with something completely different. Uh, as you know, guys, I'm a carry trader. So here I have written positive carry. So carry is the swap that I hold overnight on a currency. So a swap is the interest that you are being paid for each daily candlestick. Because if I say overnight, uh, as you can see, most of my economic or economic projections or price action projections are conducted on the daily time frame. So each daily candle pays me a positive swap. I love taking positive carries because in a positive carry, you have an opportunity to hold a currency for as long as the economy prices in the macroeconomic reports. In fact, carry trading is much better when you hold your currency in a hedge inflation trade or what we call monetary policy divergence. So it becomes easier when you hold your trade for like 2 years, 3 years, especially with a commodity like silver. Uh, because of the interest rate cut that we just received on the US dollar, I will be showing you the interest rate cut on the US dollar. I have not prepared it in this trade, but because of that interest rate cut, we used to have when I left silver, we had a negative 6 points. So a swap is paid in points. So when it was a negative carry, I had to walk away from silver. But when I walk away from it, it does not mean silver is not moving higher. Silver moves higher because of interest rates. In fact, most commodities they move to because of interest rates. Whether because of they move depending on what the central bank is saying. So silver here, my broker allows me to trade silver with. We do have a JPY, but the but because of the negative carry, and the JPY always has a very low interest rates, so it does not compete with the interest rates on silver. In fact, the interest rates on gold are, from my research, are between 3.88. It's something like this, between 3.88 and somewhere around 4% in interest rates, because whenever the US dollar goes to 4% in interest rates, the we start getting into a crossover of interest rates turning of the swap turning from a negative swap into a positive swap. So that's gold. But silver, I don't know what the interest rates on silver are, but we just got an interest rate cut in the US dollar, and I'll be checking into it to see what brought us into this positive swap, and then I'll be able to know what the interest rates in silver are, but I need to draft that into my notes. So these numbers are the carry. I call it a positive carry because the swap turns positive. Now, as you can see here, we have USD CAD. So what happens with USD CAD is that we can only trade USD CAD long. As you can see here, we have longs and here we have shorts. Longs translate to buying. So when you buy these three currency, these two currency pairs and this commodity, you only get paid when you buy them, when you hold longs. So when it comes to silver, I would like to encourage you guys, since the US dollar had just started its interest rate cutting cycle, you can hold it, and the take profit level will be like in the next interest rate hiking cycle, which might be somewhere 3 years later. So on silver, what you can do is that you can buy it and forget it. That's just how it works. But you need to use risk management for you to be able to hold silver. And here we have USD CAD. When we buy it, for each daily candle that we hold it, most of my trades they take from 1 month to 3 months in holding, or more than that. In when we're talking about hedge inflation trades, hedge inflation trades are just when a currency when a currency moves out of a recession, we match that currency with a currency that's getting deeper and deeper into a recession, or a currency that is like the JPY. We know that when the economy is doing well, the JPY economy deteriorates, it gets into the negatives. So when you're holding the US dollar, knowing that it's exiting, in fact, the currency that is exiting the recession at the moment is the pound. We'll be talking about it on the next episode. So when you hold USD CAD long, you get paid plus 2.48 points. So these ones are not measured in swaps, are not measured in percentages, they're measured in points. So when you hold pound CAD, in fact, if we get an interest rate cut in the CAD, which we may not get because the CAD is actually at the point where it's trying to exit the recession. I'll be showing you another show. I'll be talking about the commodity called the Brent crude or WTI crude oil futures. It shows that the CAD is about to exit the recession. So I'll be preparing that build towards the end. Remember, I said towards the closure of the year in the northern hemisphere, or towards the summer from October to December, which is the last quarter, and the last quarter towards summer in the southern hemisphere, which is March to June, and towards the closure of the year in the southern hemisphere, which is October to December. So commodity currencies do give us some bullish moves at those times. So if we get an interest rate cut and the pound decides to hold, which I believe might do, this swap will increase. But if we get another interest rate cut on the pound, we'll get the pound cat trade long will get into the negatives. So we'll be canceling this one. I don't really like trading it because the pound is exiting the recession and the cat is about to do the same. So it's I won't be able to hold it long term, but I'll be holding the pound with the JPY, which I'm already holding. So silver will be increasing this number because the US dollar is beginning to cut interest rates. I believe that the next interest rate might be next year. So here we move into the shorts, which means that we're going to be selling these currency pairs and we're going to be getting paid this positive swap for selling. So Euro USD short, if you are selling it, you're getting paid a swap of plus 3.88 points. When you are selling pound, euro pound, which I was talking about on the previous episode, you get paid plus 2.21 points. And euro AUD, you're getting paid this. And if we get another interest rate cut on the AUD, which will come, it is an imminent interest rate cut that we're looking forward to. So we're going to be moving into the negative. So I'll be exiting this trade. On Euro ZAR or Euro South African Rand, we're getting paid 70 plus 70.13 points for holding it short. US dollar Mexican peso for plus 40.59 points for holding it short on each daily candlestick. And the NZD USD, by holding it short, you're getting paid this, but there's a high possibility that the NZD might begin to hold its interest rates because they've started the cutting cycle ahead of the AUD. So the NZD is about to be exiting the recession and is about to be holding those interest rate cuts, and the USD just began its interest rate cutting cycle, and it might as well give us the second interest rate cut, but that might as well be. I heard the Reserve bankers talking about cutting interest rates in October, so we're going to be jumping into the negatives. So this is how I choose my currency pairs. I allow the swap to choose for me. So on the I'll be trying to move faster. Let me see, check on the time. We're at 11. So let's get back into business. So this is the negative carry. So here I pay to hold a currency. That means I won't be able to hold my currency for a long time. So here we have an AUD CAD. So these currencies can be held for a month or less because I pay for holding. So I make sure that my swap, even if it's the negatives, it has to be below 2%, 2 points. 2 points, like here, this is 2.79. I expect the negative swap to be at least 1.87, the highest. So when it gets to about 3 points, I really don't like holding these trades. So this is AUD CAD. If I was buying it, if I was holding it long, I'll be paying negative 1.31 points in swap for holding it overnight, or for each candle, daily candle that I hold it. USD, SGD, they are both correlated, but the SGD is a little bit stagnant. So when the USD goes bullish, the SGD remains behind, but those are two racing those are two runners running in the same direction. So my strategy in arbitrage trading is economic divergence, monetary policy divergence, hedge inflation, where one currency is deteriorating and the other one is actually gaining in its GDPs and inflations. So I don't like trading in the same directions, but if you are patient enough, you can actually hold these trades. They are really beautiful. Now, when we move to the short side for overnight charges, when I hold the AUD USD short, when I'm selling it, that means I'll be buying the US dollar and selling the AUD. It's negative 0.51, which is a beautiful swap. The Euro Hungarian franc, it gives me negative 1.83 for holding it short. That means I'll be buying the Hungarian forint. The Euro Polish zloty, the Polish zloty, when I buy it and sell the euro, I'll be paying negative 1.15 points overnight for each daily candle. So the Euro NZD, when I buy the NZD and sell the euro, I'll be paying negative 1.64 points for each night in swap that I hold the currency short. Pound USD, which I don't wish to hold because the swap is huge. I'll be paying negative 2.79 points for holding it short. The date is the 10th. It is the 8th of October 2025. The 8th of October 2025. Let's move towards closing this show. I'll see you on the next episode, on episode 56.